U.S. consumers flexing their spending power. October retail sales up 2.8% year over year and marking the fastest annual growth since July. The numbers suggesting economic resilience heading into the critical holiday season. How are retail stocks reacting, and where should investors look for a bargain? Joining me now, Telsey Advisory Group CEO and Chief Research Officer Dana Telsey. Dana, thanks so much for coming by the studio.
Thank you for having me.
Every year, you're the person we want to talk to right about now. So let's start with your look at the overall holiday season. You say the calendar is working against retailers, but possibly in favor of shoppers.
Could be. We have 5 fewer days between Thanksgiving and Christmas this year, given that Thanksgiving is later this year than last year, which requires the retailers, they have to sell a lot of goods very fast, and it could mean more deals and more promotions for the consumer. So we've already begun to see it. Look how Best Buy had Christmas in September. You look at Amazon Prime Day, Target, Walmart in October, and there's a lot more to come in November and beyond.
Okay, so every year you share your themes for that year. What are they this year, and what are the companies exemplifying those themes?
It's about innovation and value. When you think about innovation, things that people do not have in their closet, or newness, whether it's Birkenstock's closed-toed shoe, whether it's Ralph Lauren and some of the new sweaters that they're showing, which just led to a 10% increase in their average unit retail selling price last quarter. Or whether it's what's happening with UGG and Hoka in terms of those shoes. And as it gets colder, that's what people are definitely going to want to wear, certainly an UGG. And then you look at other items, look at Coach and the mid-single-digit AUR increase. That Brooklyn handbag they have has been selling.
Alrighty, so you mentioned cold. I have literally not put on a winter coat yet this year. I saw NOAA says it's 7 degrees on average colder in the lower 48 this year. How is that affecting retailers? You say Ralph Lauren selling sweaters?
They have been selling sweaters. When you think about the weather, it has been an impact. We've heard about it as we've gone through back to school season. Now getting a little bit cooler. I think it's going to rain all day in the Northeast already. And then hopefully it gets a little bit cooler and drives some of those colder outerwear sales. But also remember, we talked about value. Walmart, TJX, you're thinking about the off prices and the discounters, and I think that's where you're still seeing traffic congregate.
Okay, so possibility of tariffs in 2025. How are retailers thinking about that?
That's a real headwind, tariffs. It didn't help last time. It wouldn't help this time either. Diversifying sourcing is what's on the top of mind of all retailers as they try to reduce their exposure to China. But if it means price increases to the consumer, that is a headwind, and everyone's going to try to position themselves for more diversified sourcing. Some of them will bring in extra goods a little bit earlier. But if it means price increases, you have to watch the wage growth and what's happening with labor with that end consumer.
Have you seen a lot of these companies sort of buying quickly ahead of the possible tariffs, or not yet?
Not yet. It's still too early. Most of the companies are going through the Christmas season with pretty lean inventories. They'd like to maintain their margins, if at all possible, before thinking about what the 2025 headwinds would cause them to do.
All right, I want to get your advice for the investor and the shopper. If you're an investor looking for the best bargains, what stocks do you like? And if you're a shopper looking for cheap stuff on sale, where do you go? When
I think about if you're an investor, what's working? It is the off-pricers. TJX, for example, definitely one. You look at brands, I think about the Ralph Lauren and the Deckers. And I also look at an Abercrombie & Fitch, which continues to expand their moat, driving increases.
That stock's done so well.
It's done well, and now there continues to be room on Hollister. There continues to be room on the store productivity of Abercrombie and Watch International.
Oh, interesting. Watch International. Is that part of Abercrombie?
Yes, it is. It's going to grow. They're going to continuing to expand their moat overseas and gain more awareness and customer traffic.
Okay, meanwhile, for the shopper, who do you think is going to be forced to do the best discounts this year?
If you're going to want discounts this year, I mean, Walmart, obviously, not that they discount, but they're the best prices. Okay. It is the off-pricers like TJX. And when you want to think of others, I mean, you're going to watch some of those department stores also for some of the deals. That Nordstrom anniversary sale is always top of mind.
Oh, no, people think Nordstrom, they don't think sale, so that's good advice.
No, anniversary sale coming up.
And you mentioned Walmart for the shopper. Do you like Walmart for the investor?
I like it for both, and the reason why, I think this is a new, younger, modern Walmart. Look at the revenue growth from other categories that they've gotten in terms of advertising, and look at the gains that they've seen even from their, what their terms is of their higher income consumers. That's where a lot of the gains are coming from.
And they're driving Bezos crazy. Amazon wants to be Walmart, but they haven't been able to yet.
You got to think that those physical stores are a help, not hurt.
Alrighty, Dana Telsey, thank you so much.
Thank you for having me.